Okay guys, this is what you've all been waiting for. Today we're doing a deep dive into the closing disclosure where I'm gonna teach you everything you need to know on all 5 pages, and you'll never be even a little bit confused at the closing table again. Now remember, a good notary is an educated notary. So pay attention, take some notes, and by the end of the video, I'll have something for you that'll make it a lot easier to remember everything. So let's just get right into it. So this is a deep dive into page 1 of the closing disclosure. This is basically the page you saw me do the script on in a previous video. If you haven't seen it, go check it out. So over here, you see the closing information. Closing date is the date that you're sitting there signing the papers with the borrower. The disbursement date is kind of when the money goes out. The settlement agent is the title company, so that's typically who gave you the closing. The property that they're closing on, and the sales price, how much they sold it for. Over here, you see the borrower's names. You want to be sure that their names are spelled correctly here. This is extremely important. Down here, you see the seller's names, and down here, you see the lender, which is Ficus Bank. And sometimes the borrower will be like, who will I be paying, or who is this loan for? I tell them to talk to their lender because sometimes the loan gets sold, but I also let them know as of right now, Ficus Bank is who has ownership of their loan. Over here, you see that it's a 30-year fixed rate purchase. You see that it's a conventional loan. Down here, you see the loan terms. You see the loan amount, which is $162,000. You see the interest rate, which is 3.875, and you see the monthly principal and interest, which is $761.78. Now, your monthly principal and interest, principal is the amount that they are borrowing, and interest is the lender's charge for lending them the money. Now down here, you see a prepayment penalty. A prepayment penalty means that the lender could charge you a fee if you pay off your mortgage early. Most of the time, I don't see a prepayment penalty, and the rare time that I have seen one, the signer already knew about it, so it wasn't a hassle really. A prepayment penalty only applies if you try to pay off the entire mortgage or a really big portion at once. Now, if they do have a question about it, call the lender. Do not be a hero. Over here, this says balloon payment. If you have a mortgage with a balloon payment, your payments may be lower in the years before the balloon payment comes due, but you could owe a big amount at the end of the loan. It could be like a big $10,000 chunk. Now, over here, you see this kind of like sidebar. You see over here, it says, can this amount increase after closing? For the loan amount, you see it's a no. For the interest rate, you see it's a no. For the monthly principal and interest, you see it's a no. But over here, for the prepayment penalty, you see it's a yes. And it says as high as $32.40 if you pay off the loan during the first 2 years. So they kind of have the prepayment penalty rules there. But again, I would read this to them, but if they have any more questions about that, call your lender. Call your lender. Your lender will know more than you. Down here, you see the principal and interest again, mortgage insurance. Now, mortgage insurance is typically required if your down payment is less than like 20% of the price of the home. Sometimes the mortgage insurance is throughout the entire loan, and sometimes you'll see it fall off mid-loan. Like here, you see it falls off on year 8. Estimated escrow. Now, estimated escrow is additional charges related to home ownership, such as property taxes and homeowners insurance, that are bundled into the monthly payment. Now, you will sometimes see it referred to as an impound account on other documents, but don't let that confuse you. They're the same thing. So escrow is part of the borrower's monthly payment, and it goes to an account, and from that account, they pay the property taxes and homeowners insurance so that the borrower does not have to worry about paying a big bill once or twice a year. Now, if they're a first-time home buyer, I typically let them know, like, you may get something in the mail that looks like a bill, but don't panic because escrow will be handling your payment, and you will just keep that for your records. And if there's an agent at the table, the agents are shocked that you know that as well, and they're impressed by you, and you can give them your card at the end of the closing. So if they want a preferred notary to have their own notary, boom, they'll think of you, the guy who knew that little extra tidbit to let my borrower know about. Now, your estimated total monthly payment is just your principal and interest plus escrow plus mortgage insurance. Your closing costs down here are upfront costs the borrower will be charged to get the loan and transfer ownership of the property. It's sometimes referred to as settlement cost too. Now, cash to close is the total amount that they will have to pay at closing in addition to any money that they have already paid. They will either have a check or they'll have already wired the funds if they have funds to pay. Again, your closing costs are not what they're bringing to the table. The cash to close is what they're bringing to the table, or they already wired. All right, and I confirm with them at the moment. You either already wired the funds or you have a check for me today, right? Easy peasy. That's page 1. Okay, so this is page 2. Usually you won't even have to go through this because once they're okay with everything that's on page 1, that pretty much means everything on page 2, 3, 4, 5 is as they expected. So first I'm gonna go through some definitions with you, and that'll make it easy for when you just kind of go through the whole page and let them know this is this, this is that, this is this, this is that. So borrower paid, this is the column that lists the costs that are charged to the borrower. All right, origination charges are upfront charges from the lender for making the loan. Points are an upfront fee that the borrower pays to their lender, usually in exchange for a lower interest rate. Taxes and other government fees are costs associated with transferring the property to the borrower and registering their mortgage with the county records office. Prepays, this category includes interest interest on the loan between the time the borrower closed and the end of that month. It's also common to pay the first year's homeowner's insurance premium in advance at closing. An initial escrow deposit is the amount that the borrower will pay at closing to start their escrow account if it's required by the lender. The amount can be different from what they pay monthly. It would typically say something like X amount for X months. Other costs are costs for other services that they have chosen. Total closing cost is the total upfront cost associated with the loan and real estate transaction, excluding the down payment. Now, this is different from the actual amount of money that the borrower has to bring to the closing. That is called cash to close, and we talked about that on page 1. Now, lender credits is a rebate from the lender that offsets some of the closing costs. Now that you know all of this stuff, going through all these numbers, you'll sound way more confident, you'll be way more comfortable and fluid, and you'll be able to have back and forth conversations with your borrowers. Again, if they have wide questions, you ask your lender. Your only job is to let them know what is there. So if they be like, how much did I pay for my points again? You see up here, 0.25% of loan amount. You see it says points in parentheses is $405 in the borrower paid column. If they want to know about their appraisal, you see your appraisal fee was paid by someone else. So it's not in the borrower paid column, it's over here. If they want to know like, oh, I forgot how much I paid for the pet inspection, where is it? Down here, pet inspection fee, $120.50. You get me? One more thing before we move on to page 3. Over here, you see the seller paid column. This is just letting you know what the seller paid. So down here, you see they paid the transfer tax, they paid the home warranty fee, and over here, you see that they went half on the home inspection fee. That's why you see $750 from the borrower and $750 from the seller. And that could be a question that the borrower had, like, did the seller pay their half of that? And there it is. Okay, so this is page 3. Over here, you see calculating cash to close. You see what they got on their loan estimate versus what they got as the final numbers, which is what they're seeing with you today on the closing disclosure. And there's a little box, did this change? You'll see it says yes, yes, no, no, yes, yes. And they'll show you where you could find the information on these things. And I really like that part. So total closing costs, C total closing costs D, and total other costs I, and that's on page 2 in sections D over here and section I over here. So it shows you where to find things, which is really bomb if you're struggling a little bit to answer some questions. So let's go over some definitions once again. Due from borrower at closing, self-explanatory, the total amount charged to the borrower at closing. It includes the house price and closing costs, but it doesn't include any credits or rebates that lower the closing costs. Adjustments for item paid by seller in advance. These are costs that have been prepaid by the seller that the borrower is now reimbursing the seller for. Paid already by or on behalf of borrower at closing. This section details how the borrower will pay for items. It includes the amount that they are borrowing, the amount of their deposit, and any rebates or credits paid by the seller or third-party service providers. Now, this does not include the amount that they have to bring to closing. Adjustments for items unpaid by seller, prior taxes and other fees owed by the seller that the borrower will pay in the future. The seller is reimbursing the borrower now to cover these expenses. And then you see cash to close, which is the total amount that the borrower will have to pay at closing. We've talked about this a lot. Down here, you see HOA dues from 4/15/13 to 4/30/13. 4/15 is when the buyer is taking ownership of the home, which means naturally the seller should not be paying from 4/15 to 4/30 in HOA dues, which means this is a charge to the buyer. Make sense? Down here, you see cash to close, and from borrower is checked, which is good. You know that this is from the borrower. The $14,147 cash to close is from the borrower. Now, if it said to borrower, that means that the borrower would be receiving that $14,147.26. Now, this side as the seller's transaction is irrelevant to your borrower. I don't even go over it with them. I ignore it. Okay, here goes pages 4 and 5. Now, these two were the most confusing pages to me because I just didn't know what any of this means, even though a lot of these kind of explain themselves. I just was not reading them. I'm gonna be honest. All the courses I took skipped right past page 4 and 5. So when I would get to page 4 and 5, if a question would pop up, I'd literally tell them I just don't know. So I had to learn it. So if the loan allows assumptions, that means that if the borrower sells the home, the buyer of the home may be allowed to take over the loan on the same terms instead of having to get a new loan. If the loan does not allow assumptions, the buyer will not be allowed to take over the loan. So your demand feature, this allows the lender to demand immediate payment of the entire loan at any time. Now, negative amortization means the loan balance can increase even if you make your payments on time and in full. Your security interest, this just means the lender can foreclose on your home if you don't pay back the money you borrowed. Here you'll see how much it will cost if they make a late payment. Will the lender accept partial monthly mortgage payments? Now, if the borrower is unable to make the full mortgage payment in a given month, the lender may not accept a partial payment. But even if the lender does accept partial payments, the lender may hold them in a separate account instead of applying them to the loan. Or the lender may also charge a late fee every month until the borrower makes up the difference. And the lender can report this to your credit bureau. Will they have an escrow account? This lets you know, does the borrower have an escrow account and which homeowner's insurance expenses are included in the escrow account. Easy. Okay, so lastly, page 5. So page 5, I used to get a lot of questions about page 5 because the signature page is here, so they take one last glance at this page. And I'm not gonna lie, some things confused me on here, and I would just tell them I don't know. And again, you just don't sound good when you tell them you don't know and you're supposed to be guiding them through the documents. So I'm going to save you that heartache. I haven't seen a course explain page 5, honestly. I had to go look it up on my own. So you're getting a nice little, yeah. So over here, you see contract details. This lets them know to read the note and security instrument, also known as the mortgage or the deed of trust, carefully. Over here, you see total payments. This number tells the total amount of money the borrower will have paid over the life of the mortgage. Then you see a finance charge. The finance charge tells the total amount of interest and loan fees the borrower will pay over the life of the loan if they make all payments as scheduled. The amount financed, this means the amount of money that you are borrowing from the lender minus most of the upfront fees the lender is charging you. For example, if you have a $100,000 loan, but the lender is charging you $4,000 in fees in order to get the loan, the amount financed would actually be $96,000. Now, your annual percentage rate, your APR, is a broader measure of the cost of borrowing the money than the interest rate is. The APR reflects the interest rate, any points, mortgage broker fees, and other charges that you pay to get the loan. For that reason, your APR is usually higher than your interest rate. Now, your total interest percentage, this tells you how much interest you will pay over the life of your mortgage loan. Your appraisal, the lender uses an appraisal to decide how much the home will be worth. The appraisal is conducted by an independent professional appraiser. The borrower has a right to receive a copy. And then down here, you just see the contact info. This is where you see the contact information for the people involved with the loan. Pro tip, you can find the loan officer, escrow officer, and broker info here. So if you need to call anyone and your borrower doesn't have their phone numbers, you can look here to possibly get a hold of them. Now, pro tip again, I always like to shoot the lender an email before the closing to let them know that, hey, I'll be taking care of your closing, and an email after the closing to let them know that the closing is done and it went well. And I let them know any special notes I feel like they need to know, even down to if the borrower seemed upset or uncomfortable about anything, because maybe this is something they need to explain to the borrower a little more, who knows. But this keeps them in the know and gives them peace of mind. And the loan officers put so much work into these loans that this little step goes a long way. And this is also great to build your brand as a notary in your area. Remember, you want to be valuable. How many notaries do you think are calling the lender and letting them know this is that, the borrower seemed upset about this, you may want to address that, and this is everything, right? I even sometimes give the borrowers like a gift, a lottery ticket or a Snickers, and be like, hey, this is from your lender, to just really drive it home, like your lender is here for you, and drive home that relationship. And this is part of my marketing, because then the lender will be like, wow, I like that notary. And next time that they're doing work with whoever hired you to do the closing, they can request for you directly. And I've had it happen where they're like, hey, I want him to cover all of my loans. And that's been where I've gotten a lot of my business as well. And at the bottom here, you see, this is where they sign and date, bingo, bango, boombo, you're done with the closing disclosure and you can move forward to other things. You've done a lot of work here. You've learned a lot. If you've gotten this far, you know way more. I promise you. You know way more than a lot of notaries in your area, and your business is gonna thank you for it. So if you wanna see a script of how I quickly go over page 1 of the closing disclosure with the borrower, take a look at that video right here. Okay, so I almost forgot about what I said I was gonna give you at the end of the video. So this is my Notion template here with just basically everything that I've talked about throughout the videos with some little tips and stuff. Anything that you heard here is on this. You can download this onto your phone as long as you have the Notion app. This will be in the link in the description below, and you'll be able to download it, open things, close things. You see? All right, so now I'm gonna leave for real. Click the next link if you wanna see my closing disclosure script and breakdown video. And don't forget to like and subscribe. Good night.